YouTube channel is Ambassador Sport right here. If you are seeing my video for the very first time, please do well to subscribe and note that this video is for educational purpose. This channel is basically for educational purpose to help those of us that are still coming up in trading to learn and master SMC strategy and how to navigate through the forex market. So I do drop updates based on psychology. I do drop updates based on market review, market analysis, and educational content just like this one. So on today's video, if you're watching this video, I know that this is one thing that you have been finding so complicated: how to understand a true break of structure and a fake break of structure, how to know when price has shifted structure to the downside or the upside from the actual trend. So one thing we need to understand is, before you can understand a shift in market, you need to first of all understand market structure. If you don't understand market structure, it will be very difficult for you to understand shift in markets. That's the honest truth. If market structure still confuses you, you will never understand shift in market structure. So in this short video, I'm going to be explaining to you what you need to be looking at before you can actually say that price has shifted structure to the other side. So looking at this scenario here, we have price in an uptrend. We can see price breaking structures to the upside. And what you need to understand is, when price is breaking structure, you don't count weak candle as a break of structure. For instance, let's say market is pushing and a candle pops up, right? Let's say a candle pops up and then there is a wick. The candle uses a wick like this. So let's just say this is a wick. The candle uses wick to break structure, and you say this is a break of structure. No, that's not a break of structure. That's why many of you tends to fall victims of markets hitting you out, because you mark out wick candle as breakout structure. So you don't count wick as breakout structure. You need to see a full body candle closure before you can count it as a break of structure. So looking at this here, we have price breaking structures to the upside, right? Why price is breaking structures to the upside, right? You will notice that market is not in a straight form direction. First of all, we need to understand that there are two types of market structure, which is number one, internal structure and external structure. So we have internal structure, we also have external structure. These two structures is what makes up the full concept of market structure. For instance, if you say you know market structure and what you know is something like this: higher, 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 low, higher, 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 you still have a long way to go in market structure. You need to understand internal and external break of structure. So here we have price push up break structure to the outside, which is an external break of structure. Then retrace gave us this is an internal structure form. Then price came back, broke this structure here, which this structure here. Somebody will now mark this structure. For instance, somebody will now mark this and say, price broke structure here, and then come here and say this is a change of character. The person will say this is a change of character, and then the person will now be looking for entry at this level. And what happens? Price blow you off, right? Price blows the hell off, right? Why? Because it's very simple. Because what you are marking as a breakout structure is not a breakout structure until there is a full body candle. You can't use wick to mark a breakout structure, right? So once there is a full breakout structure, you want to mark the low that caused that breakout structure, right? And then mark the high of that breakout structure. So what is your anticipation? This high and this low becomes your trading range. This high and this low becomes your trading range. That's the range by which you want to trade, right? What do you now look out for? As soon as price retreats to a certain level, right, you can't just say there is a change of character. For instance, here, you can't just say there is a change of character here until price takes out this low that broke this high. Until price takes out this low that took out this high, that's when you can say, okay, we now have a break of structure. The same thing in this scenario. You can't say because price took out this low, you now say price has shifted structure to the downside. No, until price takes out this low, price is still in an uptrend, right? This is the external break of structure. This is an external break. This is an external liquidity. This is an external liquidity. So any other thing that is happening inside here is internal. What you should focus on is the external, and the external is what you focus on, not the internal, right? So just please follow me gradually. So here we have price from this low here, which caused this massive break of structure here, right? What else are we anticipating? We anticipate price to retrace to our point of interest and then continue to the upside. Then look at this scenario. Here we have price broke structure here. Somebody will now say, yes, price has broken structure, a major break of structure. Yes, price broke structure. Then price came back. We need to come and take out this. We need to come and take out this low. And someone will now call it a change of character. It's not a change of character. It's not a change of character. Why is it not a change of character? Because if we are following the concept of market structure, right, we have external and internal. So looking at this, looking at your point of interest and other confluences that makes up your point of interest. Like for example, we have imbalance, we have order block, we have liquidity levels. You will know that this is a liquidity level that was formed. If you understand the concept of liquidity, you know that this is a liquidity level that was formed. And what happened? Price came to take it out. Then tap on your order block before then pushing back to the upside. Tap on your order block before continuing to the upside. That's exactly what happened. So what you are calling a break of structure is not actually a break of structure, right? It's not actually a break of structure. So what you are calling here a break of structure is not actually a break of structure. So this is where the real break of structure then happens, right? This is where we now have the real break of structure. Then the next thing, what do we look at for? This low that caused this break of structure, we mark it out. Always remember that whatever price is doing inside is none of your business. What you want to focus on is what price is doing, what price is going to be doing when it gets to this high and this low, right? So if price is building this like this now, somebody will not say, we are in a downtrend. The market is trending down. Is it correct? Yes. Is market trending down? Yes. But this is internal structure. You can't use it to validate the overall market trend, right? You can't use it to you can't use it to determine the overall market trend. This is a internal structure being created, right? So what are you to anticipate? You want to see price have shifted structure when price have taken out this low. Once price violates this low, that's when you can now boldly say, price have actually shifted structure. You understand? I hope you're following. So right here, we saw price broke this structure to the upside. What are we anticipating? The next low, we have this low here. This becomes our next low, and this becomes our next high. Then look at what price did. We can see that price started retracing down, right? The next thing we saw, price took out this low, the last low that caused this break of structure, which is a violation. That means price have now, we can see that price have automatically shifted structure, right? Price have, from this side, from here, you can't call this one shift or break of structures. You can't call this one's you can't use this to validate that market have shifted structure. No, but these are internal structures that market is creating, because on a higher time frame, you're going to be seeing something like this. But on a lower time frame, you're going to be seeing something like this. The same move, but in different structures because of difference of time frame, right? So from here, we saw that price broke this structure here, and then we got a full change of character. This is when we can now say, yes, we have a market structure shift, which is change of character here. That's when you now start what? That's when you can now start looking for opportunity to take sales, right? Not that you see 3 minutes candle forming higher high, higher lows and higher high, and you just feel like it's now a structure shift. You need to confirm the structure shift from a bigger time frame. That's why I always encourage everybody to endeavor to use higher time frame, right? Your best time frame should be daily 4 hours, 1 hour, then 15 minutes and 5 minutes for entry as a day trader, right? You can't be using 2 minutes, 3 minutes, 4 minutes to look out for structure and trade. Price will be messing you up, right? So on a bigger time frame, we normally see price in this direction. We normally see price forming higher highs and higher lows, right? But so for you to understand market structure, you need to understand the power of higher time frame, right? That's why I always advise endeavor to use higher time frame to do your analysis, because you can't be using lower time frame to validate what higher time frame is doing, right? So you need to focus more on the higher time frame. So for instance, look at this on a daily time frame. This is how market is going to be looking. But if you come down to 15 minutes or 1 hour, you see price looking this way, right? So from here, you can see price breaking structures to the outside, break of structure, break of structure, break of structure. And here we have a structure shift, right? We have break of structure to the downside. We have another break of structure to the downside. Does this now mean that the overall trend of the market is downtrend? No. If you're trying to follow this direction, if you're trying to follow this bias, okay, now we are not in the downtrend, you're going to, once price gets to the zone, which is this demand zone, that will be here. Once price gets to that demand zone, tap on it. What happens? It will shift. It will definitely shift back to the upside where it's coming from. It's going to be shifting back, and by then, meanwhile, you're still looking out for opportunities to sell. When market just came, took out liquidity here, a sweep of liquidity here, and then continued back to the main actual direction and start pushing back to the upside. Then here we got a break of structure. After this break of structure, indicating that yes, price is actually in a strong bullish direction, right? Then here we saw price shifted structure again, lower time frame. Remember, this is lower time frame. We saw price shifted structure here again to the downside, and then we see another break of structure here to the downside. Then what else did we see? We see that price came here, shifted structure to the upside again, which is this same sorry, this same structure we see here. This is not how it's going to be looking on the chart. It's never going to look straight like this, but this is the actual example of how it's truly going to be looking. And that's why you need to learn to follow the bigger picture to understand what the smaller picture is doing. So I'll quickly take us to the chart. Let us see what I'm trying to say. All right, so let's look at this market structure. So we can see this is on 4 hours time frame. We can see the market is looking very clean to the upside. You can see a pullback here, a break of structure. All these pushes is one, right? Then we got this retracement, and then we got another push. We got this retracement, and then we got another push. You can see that it's looking very simple to see. If we bring this out, if we bring this thing out, you can see that it's looking very clean, right? But on the real chart, is it how it's looking? Let's go to 1 hour time frame. Is it how it's looking? No, it's not how it's looking. So on the 4 hour time frame, let me take here. I'm going to be taking here. We have this push, pullback, push. So I'm going to be taking, let's say here, I'm going to be taking this structure here, right? I'm going to be taking this one here. So from here to here is what I'm going to be using to do this illustration. So we can see that on a bigger time frame, this is just a drop. On a bigger time frame, we can see that this is just a drop, right? But let's go to a lower time frame. So for me to do that, let me just highlight it so that it will look more clean. Let me just highlight it. Let me highlight it so that it will let's give it which color, let's give it this dark, right? So let's go to 1 hour time frame. So on 1 hour time frame, you see that structure that looks like one straight line. You can see how it's forming here, right? Look at it. Let me mark it out. We can see how it's forming. This is a drop, a pullback, a drop, a pullback, a drop here, a pullback here, a drop, pullback, another drop, right? Another pullback, which took this one out with weak rejection. So hence is weak rejection. I don't count it as a market structure shift. And then another drop, taking out this low, and then we saw a push to the upside, which took out this high, giving us a change of character. What happened? Price came here, and then we can see what price started doing. If you understand this, it's going to increase your understanding of the market by 100%. It's going to increase your understanding of the market by 100%, because this is what separates profitable traders with people who are still struggling. That's the honest truth. This is what they know that you don't know, right? Let's bring this out. Remember, this is just that one line. This is just that one line we marked out, but look at how it's looking on the chart. Then let me now clearly explain to you. This is why you don't need to focus on lower time frame to trade. You look at for the bigger time frame. So here, this is where we have breakout structure. Then we have another breakout structure here. So here, this is the last breakout structure on the lower time frame. So if you are following the bigger picture of the market, you will know that price actually came to a demand zone. Let's go back to the chart, the bigger time frame. So from the bigger time frame here, you will know that price came to a particular zone, which is here. You can see the demand zone where price came. Price came to that demand zone. So if you are only looking at the lower time frame structure and you're not looking at the higher time frame, you won't know that price have come to a demand zone. And from that demand zone, you now start anticipating to buy. You will not know, right? That's why it's good to follow the bigger time frame to understand what market is what doing. So for me, that is following the bigger time frame. As soon as price came here, I know that okay, price have come to our demand zone. I will never want to sell again, because while price was doing all this stuff, while price was pushing down and breaking structures to the downside, you can be selling, right? But once price have come to a demand zone, give you a change of character to the upside. What are you anticipating? Simple. You look out for the demand zone that caused this break of structure to the upside. You mark it out, and then that's where you take your words, your long position. That's where you take your long position. Put your stop loss below, and then target the place that market started selling from, which is this level. Target it. It's good. It might take for days before your TP will hit, right? But if you're a person that you can't hold your trade for a day, you can just target this level here, this structure here, because that one will definitely go out for that day, right? You can just target that structure there and then take a profit and go, right? So this is what we need to understand in identifying market structure shift. Let me quickly explain that again. If we go to this chart, right, this is the place I marked out. Remember, we can see how price is dropping to the downside, but as soon as price came to this 4 hours demand zone, look at what we saw. This was the last breakout structure to the downside. What did we see? We see price swept it as a liquidity with weak rejection. Price swept it, and after that, what did we now see? We see a change of character, right? Remember that this is a demand zone. And for price to come to demand zone and give us a change of character means that buyers are there. And what do we now start looking for? You mark out the other block that caused that break of structure, which is this other block here, right? You mark this other block, this demand zone here. As soon as price comes there, if you don't want to hold for long, you can just enter, put your stop loss below your zone, and then target this high here, target this high, and for that day you are done. But if you want to hold until price is TP, that's when you now target the high that caused that shift in structure. And you can see that definitely price will always do what? Come there, you can see it, right? So this is trading for you. If you understand the concept of market structure shift, and if you understand the concept of market structure and then understand how to actually trade it, you are going to be ahead of 90% of people, right? Just like this trade that is running currently right now, right? This trade that is running currently right now. This trade that is running currently right now, right? Let me quickly show you. Okay, sorry, I can't show you that. But this trade that is running currently now, how did I enter this trade? It's very simple. As soon as price came to this demand zone, I went to my lower time frame, go down to 15 minutes. You will see what happened. As simple as that. See, on my lower time frame, you see how price swept liquidity, and then what did we see? We see a change of character here. After this change of character, what do you look at for? You look at for your order block that caused that change of character. Where is my order block? This 15 minutes order block here. This 15 minutes order block, right? Some people will now ask me, why didn't I mark this one below? I can't mark this one below. Do you know why I can't mark it? Because price already, you can see this weak rejection candle right here. Price already closed the imbalance, so price cannot be coming back again. Many times price will not be coming back, but sometimes price do come back. So what I did was I went to a more bigger time frame, which I think I used 1 hour if I'm not mistaken. Exactly, you can see my 1 hour time frame. So on 1 hour was where I marked out this zone. What was I anticipating? I only need price, because on 1 hour you can see it more clearly. You can see that the imbalance was closed. So as soon as price started ranging here, I knew that price was building liquidity to be taken out. You can see this liquidity that was price was engineering. If you go to 15 minutes or 5 minutes, you're going to see it more clearly, right? This liquidity that price is what? Engineering, right? So what am I anticipating? I knew that price is going to take out this liquidity level, and taking it out is coming to this demand zone. So as soon as price came to this demand zone, needed to see if price is going to respect that demand zone or not, right? So as soon as price wicked, I knew that okay, is a very nice place to take the trade. That's where I took this entry from here, and you can see the trade is running very nicely. So assuming I was targeting maybe somewhere very close, I could have taken profits, right? But because you want to hold until price takes out this swing high is left for you, you can take profit at any point you want. But is price going to take this? Yes, price is definitely going to hit TP, but the only thing there is it's going to take days. It might take up to 4 days, sometimes 5 days, sometimes 6 days, because this higher time frame. You understand? So this is what separates many profitable traders from struggling traders. So guys, I believe this video must have really impacted a lot. So if you are coming across my video for the very first time, please do well to subscribe. And I will also plead with you to recommend my video to your friends, people who are still trying to find their stand in trading, because this particular channel is going to help them so well to master their strategy, especially those that are trading SMT strategies. So this channel is going to help you to understand a lot of things that you have been finding difficult to understand. Thank you guys for staying up to this time. If you have not subscribed, do well to subscribe. Turn on the notification bell, as I will be dropping premium content and updates like this. Stay tuned, guys. Shalom.